What's up, homies? Welcome to another episode of the Homeys Real Estate Podcast. This is your host, Anthony.
I'm Angel.
I'm a realtor.
I'm a lender.
And hopefully together we can break down this crazy real estate market. It's the beginning of the month. You know what time that is?
Market update time.
Time for the market updates. We're going to go over Los Angeles County. The prices go up from September to October. Are there more homes for sale? We're going to break it down for you. And there's some good nuggets here for you buyers and yes, you sellers as well. So like we typically do, we're going to go rocket rounds. I'm just going to quickly read over these charts and me and Angel are going to dissect them and then give our predictions for the future. So first things first, we look at the median sales price. From September to October, it dropped $10,000. It's now at $810,000. It's dropped $25,000 since its peak from June 2021. When we look at the amount of active homes for sale, it did increase. We have about 400 more active homes for sale, which is good news for you buyers. And as a result, the median days on market has increased from 11 days to now 12 days. Huge news for you buyers, especially considering that it was 9 days just 4 months ago. When we look at inventory months supply, this is if there was no more homes listed in Los Angeles County, it would take this amount of months for the current inventory to be sold. Right now, it's at 1.9 months. This is still an extreme seller's market, but it did increase from 1.8 to 1.9. In a balanced market, we're talking about 5, maybe 6 months in Los Angeles County, and in a buyer's market, it's going to be 6+ months. So as you can see, we're still in an extreme seller's market, but hey, we are trending in the right direction. When we look at median price per square foot, this is another really good indication of whether prices are really truly going down or not. We can see that from June 2021 through October 2021, so for the last 4 or 5 months now, it's really plateaued, which is a really good sign that, hey, prices aren't increasing. It did increase $2 from last month, but still, nonetheless, this is really good news for you buyers that there isn't, consistent growth on the median price per square foot. And then lastly, when we look at closed volume, right? Closed volume is the amount of home sales multiplied by sales price. That gives you overall closed volume. Closed volume did drop from September to October, about $500 million, but that's expected. Seasonality of real estate tells us the hottest time of the year is the summer, cools down by the winter. Now, this 14.5 billion mark is still, or 14.5 billion, mark in closed volume is still higher than any point in the last 5 years. So yes, we're selling less homes than we sold earlier this year, but we're still record pacing for year over year. So that's amazing news, especially considering that last October was one of the hottest records or the hottest times of the year, right? And we smashed last October's record by about 7.2%. So, Angel, what catches your attention about this real estate market here?
I think we mentioned last podcast. I think we both kind of predicted that market's going to cool off a bit. Home prices we're gonna go down. I think we both said probably about $5,000 to $10,000. So we were actually pretty right on, spot on with that. And I think we can both expect that, right? As it goes back to that seasonality of real estate, we talk about it a lot, but it's the winter months, it's the holiday months, right? So nothing that's not saying something stands out necessarily, but it's kind of what we predicted of that it's going to be a little bit more of a balanced market. Of course, it's still a seller's market. And I love to see that I love to see the days on market go up, right? That helps you guys out, and that's basically telling you guys, you buyers who feeling rushed to go get homes, gives you just a little bit more time, not too much, right? But and also it's a sign that it's less competitive, right? If it's taking more days to open escrow, it's because there's less offers out there, right? And less competition. So it gives you that chance to take advantage of these winter months and these holiday seasons and this holiday season to get yourself in a home, especially if you've been looking for quite a while.
Absolutely. Why I really like what we're heading at right now in regards to the real estate market is that when we look at year over year, it was really difficult because 2020 was an anomaly, right? Like we were just talking about crazy appreciation, 20%. And it was just a weird year for, several reasons. Homes sold very late into the year. Homes sold for a lot more than 2019. But now when we're looking at the median sales price for this October, this really gives us a good idea of where the market is heading in the future. Because October 2020, so 1 year ago, was the highest month, median sales price month of the year. Now, obviously, October 2021 is not. It's been dropping for about 4 or 5 months now, right? Last October, we sold at $741,000 median price per square foot. This year, $810,000. So we're at about $70,000 more, and that equates to about 9.3% year over year appreciation. This is a lot more of, this is more of what we're going to see and can expect in the future for future years. So this is why Angel and I really stress, like, hey, if you have the means, try to get into a home as soon as possible, because prices since 2013 have only gone up. And based on the statistics here that we're looking at, right, because inventory is still very low, like we're under 2 months of inventory supply, right, and we're need to be at about 5 to 6 months to be in a balanced market, and it's going to take us a long time to get there, that we can only anticipate prices going up unless there's a big shift in interest rates.
Yeah. And one thing to mention, that I think we should mention is personal experience right now in this market. Like, how have our offers been going? How have our clients been stacking up against other people, or is it a little less competitive? And in my opinion, it's been less competitive, right? Like, especially like FHA offers were so hard to get accepted a few months back, because people were coming in with 20% down or strong conventional offers. Right now, most of my escrows, or about half of my escrows, are FHA offers, right? FHA clients. And that wasn't the case, 3-4 months ago. So, and not only that, but I have clients who got pre-qualified, and within 2 weeks, not all the time, but within 2 weeks of looking, they're finding a home now, right? And that wasn't happening, 3-4 months ago. So from personal experience as well, I definitely see the market cooling off a little bit.
Absolutely, Angel. That's a great point right there. So Angel, what are your projections for the remainder of this year?
Yeah, I do definitely think the market's going to continue to cool off. I think home prices probably will go down just a little bit. And a big indicator, kind of I said on the last market update, is it's going to be a big indicator on interest rates, right? Interest rates are going to play a big factor into this. Since the last market update, they've been about the same, right? There was a spike, and they've kind of stayed at this level for about the last month and a half. But yeah, that's going to be a big indicator. And then, of course, the seasonality of real estate is going to be the holiday season is going to, slow the market down, which I think going into January, we're going to be not at a level, not at, 6 to 8 months inventory or anything like that. But it's definitely going to be more homes on the market, more time on the market, right? Homes are going to stay on the market a little longer, I think, through the rest of the year.
Okay, absolutely. So I do want to stop you right there, Angel, with the interest rates, because we've already stressed enough about the seasonality of real estate, right? Prices tend to drop. Everyone kind of knows that by now, especially been following us, homies. But interest rates. So I was under the impression that last month interest rates were higher, or I guess lower than they are this month, but they've kind of balanced out now. Or what do interest rates look like right now?
They're about the same, right? So obviously, for conventional, it's going to depend on your down payment, your credit score, all that stuff, right? But you're looking at the low to mid 3s, depending on different factors, right? Maybe some, there's even some cases on certain days, or obviously depends on the lender. You can maybe get like a 2.99. It's really rare though right now, conventional, to get in the 2s. And then FHA is in about the mid 2s, mid to higher, not like a 2.99, but maybe like a 2.75 around there. But again, it all depends on your credit score and all that, right? If you have a low credit score in FHA, you might be in the higher 2s, maybe even the low 3s. But yeah, rates are still really good though, right? Those are still phenomenal rates.
Yeah, absolutely. Okay, good. That's good to know. For some reason, I was under the impression that probably interest rates had increased a little bit. If you've been following us, homies, we posted and reviewed a chart from Keeping Current Matters that compiles a list from the National Association of Realtors, Mortgage Bankers Association, Fannie Mae, Freddie Mac, and they give interest rates projections for the next 4 quarters. And they're projecting that interest rates to be around 3.4, 3.5% by the end of Q2, which means that interest rates still have about 0.5% to go up. That's definitely going to have an impact on how much you qualify for and your purchasing power, which consequently is going to impact sales price and median sales price, for instance. So it's just something to keep in mind. Angel, what's a good tip that you want to give to home buyers right now in this market?
I mean, it's hard to come up with new ones, right? Because I just feel like I want to be repetitive. I'm not sure what I said on the last market update. Hopefully I didn't say this already. But really, really take advantage of this holiday season, right? And I think I did say this last time, but I can't stress that enough.
You got to stress it.
So, take advantage that people are going to take some time off due to this season, right? Take advantage of the fact that there's more homes on the market. Homes are sitting on the market a little longer, especially your people coming in with lower down payments, right? Like the FHA 3.5%, the conventional 5%. That's the time right now. Right now, that's where your offer can stand out a little more than others. So definitely take advantage of that.
Absolutely. So Angel, I can't stress that enough. Even if we touched the last podcast and even the podcast before that, like we really, really can't emphasize this enough. The holiday season, specifically this time now before the end of December, is the perfect time to really get a good deal on a home. If you study the charts like we do, you'll notice that there's a boom in sales price increasing from January through March. Like, is a really big boom, and then it only starts to increase from there on through the summer, because that's the way the seasonality of real estate works. So if you really want to secure a lower mortgage payment, especially considering that interest rates are still low and expected to increase, then I can't stress enough that if you have the means and you have the time, then I would try to look this holiday season before the end of December. Angel, that's a great tip, Angel. We can't emphasize that enough. So thank you, homies. I can't thank you enough for joining us for this podcast. I hope this gives you a good idea of this real estate market. If you're watching this or hearing this on Spotify, make sure to tune in on social media or on our YouTube channel to see the charts for yourself. The charts help so much. And with that said, have a great day and take care, y'all.
Thank you.
Hey homies, it's Anthony. This podcast contains my opinions and is for educational purposes only. It does not guarantee any projections and should not serve as a basis for any purchase or sale in real estate.